NIO is one of the most promising participants in the EV industry with a strong chance of becoming a global leader. Stay tuned as we have a few mind-blowing facts about NIO throughout the video. Welcome back to our channel. Make sure to hit the like button and subscribe for us to provide you with more valuable content. In today's video, we will have a look into why China warns the US about raising rates. Please note that nothing mentioned in this video should be seen as financial advice. We're bullish on NIO as of right now, but a lot of things can change over the coming years and could bring a lot of variations. So don't just rush into our recommendations. There is always the risk of losing money by investing in the stock market. With that being said, let's get back. NIO has been in operation for 6 years and is still in the early stages of development. Because of their swift execution and talents, they've carved out their own niche in the electric vehicle market. Before we look at the aspects that impact NIO's success, let's see if the stock has a positive or negative future. Let's take a quick look at why China is warning the United States about rising interest rates. China is asking central banks in the West not to raise interest rates too quickly to combat inflation, as it moves in the opposite direction to combat a steep economic slowdown. As the world continues to emerge from the chaos caused by the coronavirus pandemic, Chinese President Xi Jinping called on major world economies to drive growth by coordinating their actions. Global industrial networks have been shattered. The price of commodities continues to grow. The energy supply is still inadequate. Xi warned guests of the 2022 World Economic Forum in an online lecture that these risks compound one another and heighten the uncertainty regarding economic recovery. Xi cautioned against raising interest rates too soon, claiming that such actions could jeopardize global financial stability. If large economies slam on the brakes or reverse their monetary policies, there would be substantial negative spillovers, he cautioned. They would pose risks to global economic and financial stability, with developing nations bearing the brunt of the consequences. Many global policymakers are coping with rising inflationary pressures and are beginning to phase out pandemic-era stimulus initiatives. Last month, the Federal Reserve indicated that it may raise interest rates 3 times in 2022, while the European Central Bank said that its crisis-era bond-buying program would expire in March. Last month, the Bank of England raised interest rates, becoming the first major bank to do so since the start of the pandemic. To keep inflation under control, central banks in Eastern Europe and Latin America boosted interest rates significantly. However, China, the only big country expected to grow in 2020, is taking a different approach as its economy slows and it struggles to retain momentum. All of this is happening while the country sticks to its zero-COVID approach, a tight policy of isolating areas to prevent outbreaks that has effectively cut the country off from the rest of the world. The People's Bank of China has been loosening its purse strings to keep things running smoothly. On 17th January, the central bank cut a key interest rate for the first time since April 2020. Towards the end of the year 2021, it slashed both the reserve requirement ratio, which determines how much cash banks must hold in reserve, and the loan prime rate. Further analysis discovered that China is assisting the electric vehicle industry and is set to support with the sector's needs. By the end of its 14th five-year plan, China hopes to have a charging infrastructure system that is advanced, well-balanced, intelligent, and efficient. According to the plan, which was developed in consultation with 10 departments, including the National Development and Reform Commission, the infrastructure would be able to meet the charging needs of more than 20 million electric vehicles by then. China had 7 million NEVs by the end of 2021 after removing abandoned vehicles, an increase of 2 million or 59% from 2020. China, according to the NDRC, would accelerate the construction of charging stations in residential areas in order to meet the most recent goal. This entails encouraging the installation of amenities in existing communities and ensuring that parking spots are set aside in future developments for such facilities. According to the plan, the country will prioritize the utilization of land resources, including stock parking lots, and will construct public charging stations with fresh land supply. The country will speed up the implementation of a phased coverage program for highway fast charging networks in each province, and fast charging stations will be included in the scope of service area infrastructure. Fundamentally, NIO's financial situation is improving after the stock was crushed by debt and liquidity worries. It has significantly reduced losses while achieving significant top-line growth. A larger car variety, foray into Europe, and battery advancements all create further possibilities for growth. On the other side, the EV wars are heating up. In the medium term, the chip supply shortage is pressure for NIO. In the long run, battery shortages may become an even bigger issue for EV stocks. According to William Li, NIO's founder, chairman, and CEO, who spoke at the NIO Day 2021 event on December 18, the company will reach Germany, the Netherlands, Sweden, and Denmark this year. The company also announced that the company has technical teams in China, the United States, and Germany, as well as industry-leading security research and development capabilities, according to NIO. In 2021, NIO had a quiet year, and as a result, it lost ground to big competitors. However, 2022 is already shaping up to be a very different year. NIO will launch 3 new models this year, beginning with its new ET7 flagship sedan in March, and the second plant appears to be nearing completion. The hot Chinese business produces 3 luxury electric SUVs, the ES8, ES6, and EC6. Finally, NIO is increasing its manufacturing capacity in order to satisfy the rising demand for its vehicles. The capacity of NIO to obtain a major share of the EV market while increasing earnings and expanding beyond China will determine its long-term performance. In Hefei's NIO Park, the business is constructing a second manufacturing factory. In the third quarter of 2022, the factory is expected to be operating. NIO has grown significantly over the years, and it has ambitious goals for the future. On the other hand, EV startups and traditional manufacturers are putting pressure on the corporation. As stated earlier, the company intends to expand into 5 additional European nations by 2022. Because of its top-tier competitive posture in the world's largest electric car market, NIO has huge upside potential. Furthermore, it has official support in China, which provides it with a significant competitive advantage. This is in addition to its well-known brand, extensive network, economies of scale, and cutting-edge technology. NIO is also exploring international expansion in Europe, which might prove to be a very successful initiative for the company and lead to significant long-term growth. As a result, Wall Street analysts are virtually universally bullish on the stock, with an average price objective of more than doubling in the next year. Long-term success for NIO will be determined by its ability to gain a significant part of the EV market while boosting earnings and expanding beyond China. NIO now outsources vehicle production, which is advantageous in the short term but not long term. Because they outsourced production in the short term, they were able to expand so quickly. So, there you have it. And with that, we have come to the end of our video. With continued success, NIO is going to be one of the most successful companies in the world, and we are absolutely positive that NIO stock has great potential and will hit a greater mark by 2022. We hope you enjoyed watching the video. Thank you for taking the time to watch this video. If you found this video inspiring and want to see more, make sure you hit the like button and also subscribe to this channel for more updates. Leave a comment below on what you think about NIO stock. This will help us learn your take on it and improve our understanding. As you know, learning is a mutual process.